market. In case you're sitting back at home and you haven't had time to look at your portfolio, this is maybe very interesting for you. May and Baker is the best performing stock on the Nigerian stock market since 2017 started, a massive 312.77%. You know the story around the Federal Ministry of Health choosing May and Baker as a company to provide some, to produce some healthcare pharmaceuticals. And that has moved that company into a record high we've not seen in several years. You have Stanbic IBTC, that's a company the bank coming through with 60 kobo interim dividend. That's in the news. Philson Healthcare is the cousin to May and Baker and seems to be riding that with 117%. UBA is outperforming both Zenith, GT, with the exception of Stanbic, as one of the top banks, 94.67%. CCNN, that's a very small cap, about a mid-cap cement company based in Sokoto State. That 94%, outperforming even Dangote Cement, another bellwether, Lafarge Africa. Then you have FBN Holdings. So on that page, you have three financial services companies: Stanbic, UBA, and FBN Holdings. Then you have the three industrial companies: May and Baker, Philson, and CCNN. That looks like an evenly spread. Let's do some analysis of the markets, tracking our year-to-date, and in particular the month of August, with a bit of outlook on the new month, getting into a full swing post-holidays tomorrow. Bola Haino is the head of research at Quadros Capital. Good morning.
Good morning, boss.
It's good to have you. Very interesting year-to-date stocks. Let's start from there. But of course, let's get to that a bit later. I'm just wondering, what news actually moved the market since the year started? I know we're going to talk about FX.
yeah, definitely. So like I always say, that you can't discount FX from the Nigerian story. So FX partly accounts for, in terms of what the market does. So when we saw the foreign investors exit, it was on the back of FX. So in the month of April, when the CBN came out with the INE window, we saw the market rally on the back of that. And that window more or less allows investors to repatriate their dividends, repatriate their capital gains at market-determined rates. So we're seeing influx of investors trading that, in that window. Also for the earnings, like you mentioned, for a lot of the corporates, they posted strong earnings in the month of August, also attractive dividends. You mentioned Stanbic posted 60 kobo dividend. It wasn't just Stanbic, it was across most of the tier 1 banks. GTB did 30 kobo, Zenith Bank,
30 kobo,
25 kobo,
yeah,
Access Bank, 25 kobo as well, UBA as well, 20 kobo. So that attractive dividend saw a lot of investors also book profits. But quite interesting. So if you saw the equity market last year, it was depressed, and a lot of people were keen into treasury bills and all that. But for some of the gains we've seen this year, if you've invested in treasury bills, you might not get it for the next 4 years. So which is the beauty of investing in equity markets. 312%, that's huge, that's attractive.
For me and Baker.
But
like
that
very small cap company.
It's speculative. So
folks are buying into the future. Isn't it how stocks is all about?
Well, buying into the future, but for a lot of it, it's still speculative.
Speculative in the sense that as far as the price of this particular stock, May and Baker moves because the government says, look, we're going to produce some...
Yeah, so there's a collaboration between the government and May and Baker to produce vaccines.
Perhaps we should see more of this. Maybe this whole idea of making Nigeria or made in Nigeria or buy Nigeria, whichever out of the three, could actually lift the markets. If you speak to this side of the pharmaceuticals and you speak to this side for the industrial goods, and perhaps you say, well, for the consumer goods, it's going to be at the Villa and across the 36 state government houses, we're going to be drinking made in Nigeria. I don't want to call it Bonvita, but a cocoa product made in Nigeria, not the imported ones, maybe from Nestle. That's not demarketed Nestle anyway, even though it's a Nigerian company. But do you think that would also help the local consumer goods? Maybe made in Nigeria, spaghetti and all of that from Honeywell flour.
Well, absolutely. But for what the consumer goods have done now, some of them, they've switched from importing a lot of their what they need for
raw
materials. They're now sourcing it locally. So Guineas, for instance, 80% of their raw materials is being 70% is being sourced locally, and the plan is to make it 80%. So that is obviously going to grow the Nigerian economy. So yes, maybe government might not do partnership with all the sectors, but making the enabling import substitution also speaks to the growth of the GDP.
We need this. But in terms of corporates, in terms of some specifics as far as numbers, as far as the news cycle was, some good news since the year started. Not some good news as well as far as maybe Owando is concerned, isn't it?
Yes. So I think what I would say is that the equity market really, we've seen renewed investors' confidence. So you mentioned that a lot of companies are doing right issue now. 2 years ago, that wasn't the case. 2 years ago, 3 years ago, people tried to access capital through the equity market, but they couldn't because investors' confidence was low. But now we see an array of right issue. There's Unilever, there's Guinness, and Lafarge Wapco, Fort Oil. So there's a lot of it in the works, and that means that confidence is rising. So of course there might be some negative news, more or less, but generally confidence is rising in the equity market.
The confidence, how do we measure confidence? You think a slew of rights issues is one piece of news that we shouldn't discount when we're looking at the market? Again, is it because, well, if you're not doing well, how do you ask existing shareholders for more money?
So definitely. So last year, 2 years ago, the likes of Guinness were basically issuing commercial papers for their working capital.
Nigerian breweries did as well.
Guinness did as well. And really, they don't want to come to the equity market because they know their prices are going to tank. So now they think, okay, fair enough, I can come to the market. I think my prices have gone to rocket bottom. And I think my earnings are good. My numbers have improved. And why not move my shareholders for them to invest more? So also, right issue, because they're trying to also ensure that the current structure is being maintained. So they don't want to have too much dilution. Of course, there's still going to be dilution because not everybody's going to take up their rights. So they don't want dilution.
It's not going to be as massive as doing a public offer.
Yes.
Okay, we'll talk more about that. And again, if, as you mentioned, if equities is driving very strongly, but we've seen some yield curve on treasury bills and bonds, and does that mean that there's a bit of a changing lanes here? Maybe not in the short term, maybe in the mid to long term, if folks believe that stocks are a little bit more attractive than fixed income. Let's come back to Bola Haina, who is the head of research at Codros Capital, later on the program to discuss that with us.